Good day, folks. Today I'm going to teach you guys how to buy a good call option. If you guys are looking for call options, you're going to want to look for a stock such as NIO with a lower price if you don't have that much money. Now, there's other stocks that are bigger like Walmart and Boeing and Alphabet and Microsoft in the hundreds of dollars. But if you were to look at these options, the bigger the stock, the bigger the option price, right? So if you guys want to look for something smaller, we looked and we saw that NIO's actually gotten down quite substantially. You'd want to find something that is at a good buying point. Now today NIO has went down substantially in the pre-market. As you can see, it was just at $8.53. It had went down to $8 this morning. Today I'm going to show you guys how to pick a good strike price. Right, so now we're here in our options chain on Robinhood.com, options chain NIO, right? Okay, now we're in here, and what you want to do when you come in here to buy an option, first and foremost, don't buy anything up here. None of this 1 penny, 2 penny stuff. It's not going to work. Don't buy anything down here neither. And I don't mean that on this. If you were going to say that it was going to go down, you don't want to buy nothing here. You don't want out of the money options that are way out of the money. I would buy at the money options. Like if you're going to do something, you'd say this could go up to $8.50. You could buy at the money. This is what at the money means. It means it's almost there. It's close to it, right? This would be in the money, $8. It's already above $8. This one is in the money, right? So I like to buy at the money options. If I'm trading, if I'm doing a day trade, I will do in the money options. I will say it's already at $8, but because it's already at $8 and I buy this one, now every penny it goes up is pushing this up almost every penny. So if I had 10 of these, every penny here is almost $10 here. See what I'm saying, guys? So, and that's how you guys can make some good money trading options on the daily or the weekly, right? I'm talking more longer time frame. If you guys were going to say that, let me pull this up over here. Here's where NIO is right now. This is my trading view chart that I have. All these are my support and resistance lines on NIO. You can see down here you have a one that I built down here, and these are based on where NIO has spent a lot of time, where it has bounced. These are zones that I built where NIO has bounced. It's bounced down here in this range, and it's bounced a lot in this range, the range that it has just finally reached. So my thought is it could bounce around in this range a lot and then perhaps start moving upward, right? Form a nice upward channel. You guys could call it like a channel like this. It kind of form out like this, and then eventually NIO will start going up, or NIO will go down, right? So I had bought this move, I had traded this move from here all the way back up to here. But enough about that. If you were to say NIO was just at $16, and NIO was also just at $11, and NIO was at $11 24 days ago, right? If it was at $11, $3 higher, 21 days ago, right? 21 days. Okay, cool. You'd want to give yourself at least double that amount of time, right? You want double the amount of time in the future. So we'd say let's go for November 17th because this is the one that I'm trading. I'm trading 116 days. But if you're trading short term, you'd say it's going to go up within the next few weeks. It could rebound off of this point. If you thought it was going to go up within the next few weeks, you'd want this one. If you think it would take a month or two, you'd want this one, or even further out because it gives you more safety based on the time decay. Here's the time decay. That's theta. Time decay is how much the option loses value every day per contract. 0.0086, right? So if you were to pick a date like this and say, where would you think NIO can rebound to? NIO can go back up to where, right? If it was just here, it was at 11:30. You'd say it could go back up to 11:30. If it went back to 11:30 right here, you would need this to go to 11:24, right? And then this would be in the money. And all the way up to there, you'd be making money as long as it did it quickly. You'd only be paying $24 for this contract, right? But that is still not what I would do. I would not buy that far out. You're at $8 here. That's not going to work out. What I would do is buy at the money. I would buy the $9 because then that means soon it could reach $9. Soon that'll be your initial little bit of money that you make. But once it reaches over $9, that's when the money really starts piling on for your position. Here's where you stack your position early. You stack it early while it's out of the money, but not way out of the money. You're at the money. If there was an 850, you'd take the 850, but there's not. So essentially what you do is take this one for $64, and they even make a graph over here. They say if it reaches 964 by this date, November 17th, that is what you'd make. You'd make that amount of money, basically unlimited, based on if it went all the way up, unlimited, right? As long as you held on to it and it kept going up. So that is an option that you guys can do. The theta is 0.0086, so you're losing almost $1 a day till it does that. You can go one option further out and do the same strike price, and you've now reduced your theta to 0.0059. That means you're going to lose about 60 cents a day, or if you had 10 contracts, that'd be about $6 a day. So live in the moment, we'd say we're at 835. This is at 106. These are the ones that I traded earlier today. Where we at 0.005. Previous close was 114, and today we reached a high of 112. I actually sold at this 112. If I was to pull these up right here, I could pull this up, and I'll show you guys. I'll put my money where my mouth is, and I'm going to go ahead and buy myself a NIO call option for January 19th of next year. You just go right ahead in. You want to make sure that you're actually getting the correct number. Always double check this. This is what you need to make sure of. This number. Make sure that it's the number that you want to pay. Right? And just like that, I've just purchased a NIO call option. Now, to show you guys, I'll buy this one too. I'll buy one of this one right here. Because why? Because the previous close on this was 70 cents. And here's another thing that I'll show you guys. This is 62 to 64 is the spread, right? So if we come on over here, this is one thing that I try to do. I would try to get a medium fill. See, I had a medium fill likelihood. If you go back, it says medium fill likelihood between the spread. Now that the spread is 2, you could try to get the middle of that spread. And perhaps you could. Sometimes it's placed, sometimes it's filled. If it doesn't fill, sometimes I do this. Try it again. But if it doesn't, see, now it's went up. Now we just buy it for 64, so I could show you guys what I wanted to show you. And I've purchased it, right? Now, come on over to investing. And by the way, I don't hold that much money in Robinhood. I don't trust Robinhood that much. But now, because you're holding the option, the one option that I just bought for 64, and see, I could have tried to get it for 63, because now you're down $1 because you bought it for 64. But I mean, that's okay because we've got some time on it. But you think in the past week you could pull up now, but you can't do this until you buy it. Now I bought the option. Now I could see what this option was worth back on the 19th. It was worth $111. You go back further, it was worth $120 on the 19th. So, and look at, I just bought it for 64, so it was worth almost double just 6 days ago. 6 days ago. And what did I just tell you guys? This one had 54 days to expiration. So we're 54 days from expiration, and only 6 days ago it was worth double what it's worth now. And then if you scroll down, your time decay is only 0.086. So if you were to pull up your calculator and say 0.086, right, times how many days? What was that? How many days did I say it was? 6 days? Is that what it was? 6 days? All right, guys, 6 days. Yep. You're losing about $5 per contract if it was to go back. So if all of a sudden there was a rebound, this is rebound buying. I'm not saying it's going to rebound. This is not financial advice. It may not. It may, trade sideways for a while. It should trade sideways at about this point because we're at a really crucial support point where this thing, the buyers and the sellers are going to battle back and forth. So you may see sideways movement for a while. But if it was going to rebound, you'd say 6 days ago it was double the price. And in 6 days, if it could rebound from this point, it would be worth double again, minus the $5 per contract, right? And this theta will fluctuate. This theta does not stay the same, but roughly you'll lose $5 off of that. meaning you'll profit what? You bought it for 64 and you're gonna lose 5. It's gonna put you at 59. You're gonna profit about 60 bucks. Let's say about 60 bucks per contract. Say you had 10 contracts, that's $600, right? That you guys would make based on this, and that's based on it going back there. Now you go back even further and say this thing was just at 190, not at 120. 120 was down in here somewhere. 120 was in this area. We're talking 190. We're talking 220. We're talking 260. So this is what you should look at. And by the way, Robinhood has no commission fees, so you guys can come in here, and if you guys aren't worried about a little spread damage, like if you had to buy for 64 and see now I could sell for 62. If I wanted to sell for 62, I bet you I could sell it and it would probably fill right here right now for 62. So for $2, I was able to get insight on this entire thing. Look at August 3rd. This was the height. This is the height of NIO. This is when it reached 16 bucks. If NIO went back to 16 bucks, if there was a true rebound, and this is what you'd go further out in time frame for, but if it was a true rebound, we're talking this is an 11x, guys. This is almost an 11x. You're saying it's 62, and that's 683. Let's do one more quick math for you guys right here. 683 divided by 60. Woo! 683 divided by 62, right there, 11x. Told you guys, it's an 11x. So, and if you guys had $1,000 or you guys bought 10 contracts for that 62, you know what I mean? You're talking $620 times 11, 620 times 11. Not to say that you guys would do this, but you'd turn $620 into almost $7,000. And options have the potential to do this. Just be smart about your strike price. Your strike price needs to be in the money or at the money. Do not go out of the money. Like what I would do, and I wouldn't buy that. I wouldn't buy 4 days away because chances are you're going to lose your money because you're not going to guess the direction right. Don't worry about guessing the direction right, guys. Get over guessing the direction right. Decide to buy further out in strike. Buy a little bit, right? Buy a couple of contracts. And then when you're wrong, because you're probably going to be wrong. It's going to go from 840, you buy a bunch here, and then it's going to go to 820 or 8, right? So buy a little bit, right? And not financial advice, but if you bought a little bit here, and then it dipped down, you could buy a little bit more. And then it could dip down again, and you could buy a little bit more, right? And if your strike price was way out here, you can just keep adding and adding and adding, and eventually NIO, as long as it's a good company and you did your research and you know that it's actually going to go up, eventually you're going to have this giant boatload of call options. And like I said, not financial advice. You get this giant boatload of your call options that you've been getting better and better and better deals on as NIO went down from 9 to 8 to 7 to even 6. And then eventually it stops going down and it goes way up, and you're sitting on this giant bag of calls that aren't going to expire still for what? If you had June next year and it took 170 days to do it, you'll still have 100 days, right? If it took 170 days for NIO to shoot all the way to $16, you'd still have 100 days left, and that would provide you with enough time for you to have made a crap ton of money, right? And so I'm going to leave this here for you guys. I've got a lot more to teach you guys. But let's recap. Number 1, not too far out of the money. I would not go further than $9.50. See, it's at $8.37. I would not go further than $1 away or 2 strike prices away. Do not ever go 2 strike prices away, right, guys? And then another one, if you guys don't think it's going to go up immediately, or AKA you're not day trading it or selling it like the next day, then you got to go out like a month. I would go out at least a month. But me personally, in order to be safe, I'm not sure. It could go further down because of the recession, the looming recession above us. I would go over 100 days out. I wouldn't do this one anymore. I was doing this one a week ago. I won't do this one anymore. And I did just do one of them for you guys. I showed you guys one, but I did one to show you guys. The $64 is nothing. I'm not going to dump $1,000 into that. If I was going to dump $1,000, I got to go over 100 days out, right? If you're going to dump 5,000, you might want to go 200 days out. If you're going to dump 10,000, you might want to go over 300 days out. You see what I'm saying, guys? The bigger your bag, the safer you got to play. And I'm not saying go further and further out. particularly, but use that as a metric to measure risk, because the further out in time you go, the lower the risk that you guys have. As you guys can see, if you go out, you know, this far out and look at this $10 one right here, your theta is only 0.003. It's very, very low. So use these numbers to your advantage. I'll teach you guys the Greeks in an upcoming video. Real soon I'm going to teach you guys what all the Greeks mean. But by far the most important one is theta. If you guys are going to be buying options, not selling, even if you guys are selling options, theta works to your advantage. But if you're buying options, theta works against you, so you need to be aware of it at all times. So I'm going to teach you guys everything. Subscribe to that channel, and I'll see you guys on the next one. Love you guys lots.